everybody, welcome back to Metals and Momentum. My name's Anthony, and thank you so much to some of the new subscribers that we have over on Substack, and all the new people who have joined me here on YouTube. I think something happened within the algorithm over the last couple of weeks or so. I've seen a whole bunch of new subscribers on YouTube, and I really appreciate that. We've made some really good calls over the last little while, and I think people are starting to notice. So I wanted to just say welcome to some of the new subscribers here on YouTube, but also over on Substack. And if you're interested in joining over on Substack, whether you enter into the free tier or the paid tier, links down in the description. So let's go over the market action today, because some pretty heavy volatility and maybe some clear market manipulation happening. The president, Donald Trump, just put out that little announcement as he was kind of entering to board a plane. He was talking with a reporter, and I think he just said this like on a whim. I don't think he was like blatantly looking at, the treasury yields and saying like to himself, oh my gosh, like I gotta put out a statement. I think he just says this stuff on a whim sometimes, and it just sends oil plunging. And this is the direct quote here. "We are in the final stages of Iran. We'll see what happens," Trump said that as of today, and the market just reacted off of this single like little quote right here. Either we have a deal or we're going to do some things that are a little bit nasty, but hopefully that won't happen. I'll leave this article on Yahoo Finance if you want to dive into like the details. But like I said, it was just like one of those things where, Donald Trump was boarding a plane talking to a reporter, and I think he just, came out with this line just on the flying by the seat of his pants. And look at what it's doing to the oil markets, down 5% here today. But also what I find interesting is that we are coming into this area of potential support. The market, in previous times, Donald Trump has put out something on Truth Social. You get these huge swings. Like, look at what is happening right here. Like this, that's I guess we should go to the opposite direction there. This major move was one of the Donald Trump tweets that I was actually short oil on. That dropped 11%. Same with, I believe it was, I can't remember if it was like from the top here down to like the bottom here. That was like a 13% swing. You can see this down swing in the price of oil. I was also short oil during this point in time as well. I've caught like 3 of like the major Donald Trump tweets being short oil, and honestly, I didn't know it was going to come to the fact that, Donald Trump was going to put out a tweet or something like that. But what I find interesting is in the past, we've seen a near 10% dip in the price of oil on the announcement of something that Donald Trump has actually said. But today, what is happening? We're actually only really getting that it was a total of 7% to the downside, and then a market recovery back up to, we're down 5% on oil as of right now. I'm looking at this and at the time here, and it's 4:47 p.m. on Wednesday. So but this makes total sense. And honestly, this whole move, I feel like is about to get reversed tomorrow. I could be wrong, but I see this wedge pattern forming on the price of oil. We've been following oil for many months. I think in January, you could actually go back on my YouTube channel. I was getting long oil back when it was 55, because I was essentially seeing a wedge pattern play out right here. And as soon as we broke out of this wedge pattern, I was actually starting to buy right around this area right here. And then we've seen a massive run up on here. So amazing call that was actually documented on YouTube. I was also short oil for 3 of the major declines that we saw. This one I was mostly wrote at rate from here to here, and then from this to this area was that last time I was actually short oil. I have not been short oil since, and honestly, I don't really see it as a big way to trade oil right now, because I think the market is starting to figure out that, Donald Trump just says something and the price of oil declines, but as the more you do that, the less the market is going to decline, and they're going to start to want to see some sort of real follow through on some of these announcements, right? So that's why I'm kind of interested by this 5% decline. Do we get further downside tomorrow and actually break out of this wedge? I'm not making a bet on this. Well, actually, I guess I could kind of say I am by going along some other things that would definitely rise if the price of oil went up further. But what I'm seeing right now in the chart is actually it just come into support and then start to rebound off of that. And like I said, I think the Donald Trump effect on markets is slowly just calling his bluff because we've seen multiple double-digit declines. And here today, Donald Trump says something, and we're getting less than a 5% decline as of right now. So I wanted to go through some of the yields because a lot of people are obviously very interested in this. Back in, what is this? This was March. I started to place that bull flag on the chart of this is the 10-year bond, US bond there. And I started to trace out that bull flag and we started to de-risk that portfolio a little bit. We were only, swing trading just a couple things at this point in time. And now we are getting that breakthrough in yields. We're seeing that breakout happen right around April 23rd. And then here's where we are at today. Obviously, that big spike downward alongside the price of oil, right? So we're getting a little bit of relief in yields because oil has actually come down quite a bit. But basically, my upside target on the 10-year yield, essentially how I always measure out bull flags is this might not be correct. It's not super accurate all the time, but I would just take the top of that bull flag to the bottom of where the essentially flagpole has started. That's like this general area. And then to the top of the bull flag right here, I would essentially measure from the breakout point, that's about right here, to the top where you would get that next kind of target on yields. Like I said, not always the most accurate way to do it, but it's better than nothing, right? You're just kind of guessing when you get these major breakouts, especially to all-time highs or anything like that. But this is how I measure out bull flags all the time. And generally, you're off by just a little bit. Give yourself a little bit of wiggle room. So maybe 2 to 3% or something like that from where that is measuring out to be. And basically that's where I came up with this 4.8% yield. And that actually correlates perfectly to this previous little top. And this was January of 2025. And then also you have a pivot point right here. And then this point, this was back in 2023. So you're creating a target on your bull flag to exactly where the high was in 2025, and then also where a bunch of pivot points are in 2023. And let me just make sure that we didn't miss anything all the way back here. Let's just go all the way. Yeah, so this chart doesn't exactly go all the way back there, but that's pretty amazing that the bull flag that I had on the chart here is giving us the exact price point that is also correlating with some of the other areas of resistance on the chart. So my target on the 10-year is going to be 4.8%. I had a question, people asked me about the 30-year. We could essentially do the exact same thing. So take the bottom here to the top right about, let's take it there. And then bring that to the breakout there. And that gives you a rough level. Oops, actually, sorry, I think it was this breakout right here. That gives you a rough level of 5.29%. And then also look at this little pivot point right here. This pivot was right again in May 2025. And then right here on the 2023 as well, pivot point right there. So we are kind of stalling out right here. And and the thing that I was looking at on the 30-year is look at the well-established uptrend that we are actually in right here. This is an amazing trend that just screams to you like, holy smokes, yields have a long way to go, which is unbelievable to think about. If treasury yields continue to rise in this steady kind of fashion, and we're not even like where we're at right now, this is not even like the top of the range. Like, yeah, we're getting kind of close, but there's still a lot of up room. And look at like back here in, this was 2024, 2023, you get that major breakthrough there. But like, how many times are we tapping on the upper end of this green little channel that I'm kind of pointing in? So this 30-year bond could see yields just kind of play around in this general area and just hammer on the top of that before, you know, you get any reasonable run to like the downside, which is kind of shocking to think about, because if interest rates spike up to potentially like anywhere close to 5.5%, like think about the pressure that would put on the overall economy and also suck that money out of the S&P 500. And that is one of the main concerns that I have with the S&P 500 right now, is if yields start to rise, then you're going to get money move out of the stock market and over to government bonds, because they're going to think like, oh my goodness, well, we're going to head into a recession. Yields maybe are going to go from like 5 down to like 0% or something like that, because we're going to enter into some economic kind of crisis or anything like that. What is going to happen to bonds if they slam from 5% down to, again, 0? Well, I don't think that's actually going to happen. I honestly think that yields are just going to remain slightly elevated for a decent period of time until we actually do get a major crisis. And then probably what's going to happen is we are going to move maybe back down to like 4%, because inflation during this period of time in this economic slowdown is still going to remain somewhat high because of the conflicts that are happening all around the world. You know, who knows what other freaking strait that we're going to try and conquer out in the US. Who knows what's going to happen there, and it's going to keep inflation somewhat high. So I just wanted to go over the bond charts here and hopefully give you guys some insights there. What's really interesting is I posted an article called 10 trade setups ready for a bounce. And it was these trade setups were likely going to happen within the 18th. I'm actually going to go into the back end because I'm writing this week's newsletter, and you can see where these trades have actually laid out without giving them all away, because there was like 5 that I put out for free, 5 behind a paywall. And I started to action a lot of these trades. So if you want to get access to this article that I wrote, it has a number of trades that I'm actually putting on right now. And you can see quite a few of these for free, especially the uranium and then the short S&P 500. We're going to go over that in a sec, because I still think this makes sense, even though, you know, we're getting a little bit of decline in oil while also seeing the S&P 500 rise. And just near the end of the day here, we're getting the biggest rise that we've, just at the end of the day, we're getting that biggest rise that we've seen throughout like the entire trading period of today. But look at where it's coming into right now. It's coming into this area, which is going to be resistance. We briefly broke above the resistance point right here, and then we traded back down sideways. But one of the things that I'm kind of interested in, and one of the things that's a little bit confusing, that's why this is why I'm putting on inverse S&P 500 trades while also going along some of the other things. I don't know if we're going to get just a dramatic downfall, like all the way back to 7,000 right out the gate here, or like in the next couple trading days is what I meant to say there. I don't think that, you know, we're just going to like slam down to 7,000 from here. I think it's going to be a gradual, just slow like decline. But if we do end up breaking out of this little bull flag, because that's what this is. This is a bull flag forming right here. And if we start to break to the upside and break above this red kind of resistance point right here, then you are going to see a further action to the upside. And we could just begin rallying in all markets. And then in that case, I would want to take off my inverse shares and sell those at a loss here. But ultimately, this market is so, there's just like the risk levels are just absolutely crazy, because not only are we slamming into this resistance point, and if you go back all the way a little bit further here, you can see we've hit the resistance point right here, here, and then pull back from there. And that's where I'm getting this resistance point from. But what's also really interesting is when you apply a Fibonacci chart to this, it comes to a really key point. So right in this area, there was that resistance point that we were running into, but also this 1618 kind of Fibonacci kind of point. This is a key technical level. When you break up into an all-time high, generally you do touch that 1618 and then maybe even retest towards where you initially broke out to. So that's why currently I do have a price target on the S&P 500 of 7,000, but I'm watching this bull flag that's kind of forming right here and just making sure that we don't break out to the upside. And then, like I said, I'm in my portfolio right now. I'm not really sure which way it's going. So like, I'm just going to take on inverse shares, but I'm also going to take on swing trades that could potentially participate in the bounce, that if we get that bounce back up above this resistance point right here on the S&P 500, I want to participate in that. So I'm not 100% sure on which direction it's going. So I put out that article, and in the article, there are inverse S&P 500 trades that I'm putting on. So I just walked you through the setup for that. I do think ultimately we will retouch 7,000 because that's generally how breakouts go. You get big breakouts to the upside, and then you retrace down to essentially where you broke out from. That would take us back to 7,000 right about here. And then we're going to see what we do from there. Are we going to just slam lower, or are we going to bounce off of that? And if we start to slam lower, then I'm just going to start to get much more defensive than where I'm at right now, because I am long a few things in the stock market right now. And we can go over a few of those things. One of the trades that I haven't put on yet is SRUUF, and I'll show you that chart in a little bit here. URNM, that's one I haven't put on. It kind of broke that key resistance level. I talk about it in the article right here. But the soft commodities are quite interesting as well. So basically, I did put on shares of WEAT a little while ago. I think it was somewhere around, maybe around like right at the bottom actually here, because I sent the trade notification in the morning, and then by the end of the day it was up like 6%, which is really crazy. But this is an interesting setup right here. Now, with a little bit of hindsight after writing that article, you could see we actually have a bull flag formed on this chart as well. But we're also trading within this greater parallel that we've been trading in for quite some time. This is a well-established uptrend, and there's actually two commodities that I've seen recently and that I've actually opened trades on, because they are trading within this nice parallel right here, which is really interesting. So very interesting. The soft commodity space, it's probably going to get hit a little bit when, the Straits of Hormuz get opened up, but over time, you're probably going to see into the fall that not only is inflation going to probably remain pretty high, you're also going to see that trend likely continue upward on some of these soft commodities. So wheat is one that I've wrote about. There's another one below. I'm not going to go too deep into this article because I put a paywall on there. I just want to make sure that we respect some of the people who are actually paying for the trades in this article here. I will go over the gold chart because that was part of the free option as well. In the article, I'm seeing gold start to make a little bit of an uptrend. So we have a low, and then a higher low, and then a higher low right here. But what we are seeing on the gold chart is actually a little bit of a breakdown. And what's interesting about gold is that if the S&P 500 does break down to 7,000, and if we just measure this out, like, so we're right here, and this is a 6%, let's call it 6% drop down to 7,000. If we did see a 6% drop in the S&P 500, gold has also been trading alongside that S&P 500. So I'm looking at the price of gold and seeing, it just hit into resistance here. And maybe we can start to look in the coming days. We're going to make sure that we don't break out or anything like that. But in the coming days, I'll probably apply an inverse position, especially if the S&P 500 doesn't break that into that like next leg going higher. So if the bull flag actually kind of fails and just starts to break down lower here, then we can start to apply some of those inverse trades. But if the bull flag starts to play out and we actually break to the upside, then we would want to avoid that, because gold keeps trading alongside the S&P 500. But right now it's actually breaking this little uptrend here. So we got a low, a higher low, and now we're actually breaking down lower right here and retesting this. It's going to be a resistance point going forward until we break above that, if we do break above that at all. So very interested on the gold chart. I haven't put the inverse gold kind of strategy that I kind of came up with going forward. Silver is also really interesting, but like I said, silver always lags behind gold. When gold's going up, silver generally takes a little bit of time to go upward as well. But what we're seeing on the silver chart is it's actually holding up while gold is breaking down. So again, we're getting that lag effect where gold is going down, but silver is kind of holding up here. And if gold continues to go down, then there's an opportunity to take the inverse on silver and look for a move down to $54. You'd probably see that 200-day moving average be a little bit of a support. That's what I have on the chart here, the blue line. And then I would look to take that inverse trade as we ensure that gold isn't actually going to break out right here. Because if gold starts to break out and like oil starts dropping, then we're probably going to see silver rip like we got caught on this single trading day there. It was like a 7% gain in silver, and we were inverse there. Brutal little trade there that we put on, but sometimes that happens, right? We have some losses and we have some wins, and we've had a lot of wins lately, and it was bound to happen that we're going to take a loss. And that was just one of those days that, it just slammed higher on us as we were inverse. But this is starting to get really interesting, because if you wanted to apply a risk reward on here, if you took a short position from right about here, I could honestly see maybe it trading up to 81 and then breaking down further. But your downside here is if you took it to the key support level, let's say it just dropped like half to here, we're talking about a 21% decline here versus your total downside is 8.13%. That's pretty good risk reward. But like I said, I'm going to wait to make sure that gold is actually going to continue down lower, and then we'll probably see silver drag alongside gold as well. So that's something that I'm really interested in. I did have in the free portion of the article uranium as a potential trade. I even put in some risk reward levels on here. I haven't taken this trade yet, because what I want to see is I want to make sure that level on uranium is actually going to hold. So right underneath this, maybe I'll just remove this for a sec. You can see where I actually rode this little movement from here all the way up to here. And then I was watching this sideways kind of channel form, and I was going, this doesn't look good, actually. We're gonna potentially roll over and come back and either retest this 1892 level or at least the 200-day moving average. So what I did was removed the uranium trade. I took a very slight loss because I was I was started to accumulate right around this area. And then I was just essentially buying all the way down here. I made that final purchase on the 200-day moving average. And then we got up to right about here. But end result was I was down slightly on the trade. People were a little bit rattled because I was like, oh, it's gonna like roll over, and they thought I was just being like scared. But then you could see it with a little bit of hindsight here now, where I've actually rolled back to that 200-day moving average. And if we had waited till this potentially rolls over and then goes for a further bounce, then we missed out on a huge opportunities in other sectors, because we've been making other trades that have gained multiple like 5, 10, 12% to the upside, while uranium has essentially rolled over. What I'm looking for is the 200-day moving average to hold, and then I want to see that breakout of this little channel here. So if we can get up something like this, or a little retest, because there's that area of 2052, and then right around there, as long as this key area holds, then we would look to be off to the races on uranium, and we could see a potential run up toward the 2515 kind of level. At minimum, at least back up to 2187. That's this level right here, right? Like this carried on all the way over this way. That would be a small little bit of resistance point there, but a nice run up to here would be a decent gain, right? So just weighing those risk rewards, if we caught it somewhere around like here, and then maybe even putting in like a quick or a tight stop there or something like that, then what I would look to do is potentially ride it up to this resistance point. There's 8% to the upside versus your 1.63% to the downside, something around there. That would take us back into the channel there. And then you'd maybe look to sell out of that position if you wanted to trade it like that. 8% versus 2% to the downside. That's pretty good risk reward. I like that opportunity, but we're just going to wait for the chart to tell us that we are indeed ready to come off that 200-day moving average, retest that channel, and then go off to the races like I thought we would do back when we were over here. Really good moment, when you have that documented on YouTube, where I'm essentially saying like, right around this area, this looks like it's about to roll over, and then that's exactly what it does. So really good opportunity on SRUUF. U.U is the Canadian ticker. I would probably look to trade it in Canadian dollars. U.U is the ticker. That is SRUUF, the Sprott Physical Uranium Trust. But URNM, a little bit more of a riskier trade here, but it has broken down through this key level, through this little parallel. So not the best, but it might, and not the best looking chart, that's for sure, but it might hold up if the Sprott Physical Uranium Trust starts to turn around. Then we'll probably see some follow through on URNM as well. And this is oversold versus what the Physical Uranium Trust actually is looking like right now. So big opportunity if we reclaim that 200-day moving average, and let's set up our risk reward for a long. If we reclaim that 200-day moving average, I would probably stop out just underneath 6016. Give that a little bit of room to run because this stock is super volatile. And then if you took it all the way up to right here, because this chart is essentially the same as physical uranium, right? You have 23% to the upside versus 4% to the downside. That's amazing risk reward in this trade right here. So lots of other trades to go through. That was essentially was that close to 5, the 5 free ones, but there was other ones that I started to actually action. So I sent buy alerts on another position. One of the best risk rewards is actually behind the paywall. I started to action that trade yesterday. We're slightly in the money there. Then that was a sell on what was that, nat gas. So that trade was in the the trade in that I was ready to set up for a bounce. We got that bounce rate on, I think that was Tuesday. So took some profits there already. And then we just actioned this trade here today. And that is another soft commodity that I'll save for the behind the paywall there. So if you're interested in getting more information, the links are down in the description down below. Thanks so much for watching. My name is Anthony, and we'll see you over on Substack. And again, thank you so much for everybody who has subscribed to the YouTube channel here. Like I said, I just logged in like yesterday and I was like, what the heck is going on? Like I saw a bunch of notifications. So thank you so much for being here, and hit the bell notification. So next time I post a video, you get notified right away. Sometimes I post videos and it's like, you got to action this like essentially like tomorrow or something like that, or the next day after that. So yeah, that's where I'm going to leave it. Thank you so much, everybody, and we'll see you in the next one.